But first, we begin with the markets, as we always do here on NYSE Live. Joining me now is Achilles Larrea, founder and CEO of Larrea Wealth Management. Achilles, welcome to the show.
Good morning, Ashley. How are you today?
Doing well. So let's get right into it. What does the end of this shutdown mean for markets?
If anything, we're seeing a little bit more certainty. However, the effects of the shutdown are going to really be seen within the next month or so. There's a lot of factors that are going on right now. Is it going to affect GDP? Is it going to affect corporate earnings going forward? Is it going to affect the unemployment going forward? So a couple of things that are really hitting home that we haven't seen the numbers yet. We're not going to see the numbers from October. We've already been told, but that makes us wonder what is the Fed going to do? What is GDP looking like for Q1 26? We think that as far as the shutdown is concerned, we're looking at a negative to 1% effect on GDP at this moment. And that's being conservative. Remember, recessions never come and knock on the door and say, hey, I'm here. They're usually 6 months behind as far as the data is concerned. I don't think necessarily we are in a recession mode per se, but I think the numbers are troubling because we're seeing higher than normal inflation. We're seeing higher unemployment. And, are we heading towards recession, or is it the dirty S word, stagflation, which could be that non-growth, non-starter for the economy as a whole going forward in Q1 26. I don't think we're there. I think we're looking more likely at a recession towards end of Q1, beginning of Q2, but I've been wrong about that. So all to say, going forward, investors really need to be on their toes, especially towards the end of this year. I think in spite of what's going on, there's plenty of opportunity to make money, and we could talk about that as well.
All right, and stagflation is a term that we have heard from other experts on our show. Can you break down for the viewer what stagflation means?
Yeah, it's very simple, where you have a combination of negative GDP growth, you have high unemployment, high inflation. So it's kind of like a perfect storm. And it's not the kind of storm you want to deal with, that's for sure. We saw it in Japan. To give the best example of it, during the 80s, after their huge run up, and then all of a sudden, those three factors affected Japan, and they were in stagflation for almost a decade. We've seen it in Europe. So these are the factors that go into stagflation. It's not something we want to go into. And the hope is that corporate earnings will kind of save the day, and that inflation will remain tame, that the Fed can and will control it, and that this time of year we see a lot of unemployment because companies are trying to clean off the books and get leaner for Q1 26. But I think at this point we're beyond that. I think that this is the one factor I think that is higher, that the Fed is going to be it really needs to be on top of. They're going to have to provide more liquidity to the market. They're going to have to make those cuts as well, even though they're kind of leaning not towards doing it at this particular point. But one thing is for sure, inflation is the constant, and we're seeing it creep up bit by bit along with unemployment. So ever watchful, and how it affects GDP and how it affects unemployment going forward.
And although the shutdown is over, investors and policymakers are not, or will not have several pieces of hard economic data, including the October jobs report. How do you think this will affect the Fed's decision making when it comes to rates?
Well, the Fed is not reliant solely on the data. They have ADP's private data. There's several other factors that could come out before their decision making. They're kind of leaning towards stopping the easing at this particular point, but and nothing's a given at this particular point. What I'm thinking at this point is that the Fed, in spite of the lack of tangible data we're seeing, has other methods to come in and make the decision for another rate cut. And that's where I think it's going to go.
All right. And how are you advising investors to approach this period of relative uncertainty?
Here's the time to get in on names, high quality names, growth, technology, infrastructure. We're going back in, and nuclear and quantum computing. This is just some of the sectors we're very high upon right now. I'm telling my investors right now, my clients, saying, hey, here's the opportunity to get in on high quality names, be strategic about it, not putting too much credence in as far as any one name per se, but most certainly to get into the sectors that have been dramatically affected by this shutdown, because you're going to see a faster turnaround time and more growth in the portfolio. That's for sure.
All right. Thank you, Achilles Larea, founder and CEO of Larea Wealth Management.